there are going to be pulls and pushes while we're dealing with the coronavirus pandemic, and the US markets are going through a meltdown right now. At this moment, as we speak, the Dow nearly 900 points down, about 882 points down, 3% down. The Nasdaq also melting with a 2% hit. The S&P 500 almost 2.5% down. Now, a couple of factors which are bothering the US markets, and one of them are reports and hints that perhaps another round of restrictions could be imposed in the UK after coronavirus cases have been surging. There is also a fear in the United States that a second set of stimulus may get stuck in their legislative process after the death of a Supreme Court sitting judge, Judge Ruth Ginsburg. But let me go across now to Peter Cardillo and Jeff Dennis, two experts who are joining us on the show now to break down what is happening in global markets and what is the impact they see of that on India. Good evening, gentlemen. Evening my time. Peter Cardillo, let me start by getting your take on what exactly is going on.
Well, there's a lot of fear out there this morning, and that fear is not only about the coronavirus that may cause further lockdowns in Europe. There's a good possibility that certain parts of Great Britain will once again, of England will once again be shut down, and of course, the debt rise here in the United States is 200,000 at this time, and then there are other problems. We have perhaps political upheaval coming due to the fact that Ginsburg has passed away, and that President Trump is trying to get his new, he hasn't announced it yet, but his new nominee perhaps passed before the election. So this is also a concern. And then I think there's another big factor here. If you look what's happening in the US dollar, the dollar index is soaring this morning. It's caused short covering. People got caught off guard, and that's having a huge impact, a huge sell-off, I should say, in the commodities as well. If you look what's happening in gold and silver, oil prices are down sharply, and commodities in general right across the board. So all of these declines add up to the fear factor, and we're seeing that with the VIX this morning, which is up almost 5%, trading a little above 30.53 at this time. Why is this happening? Well, obviously, if we do have another lockdown in certain parts of Europe, that means more economic pain, and that's the reason why we're seeing the strong dollar. But then again, with a surgence of new cases in the United States, that may also mean an impact in economic activity here and cut short any of the progress that we've made since the summer months.
Jeff, do you see that as the primary cause of the fear factor, as Peter calls it, for global markets, that so many months down the line, we're not really sure when we can get coronavirus under control? And is that what is fueling the meltdown that we're seeing?
I agree with everything Peter said. I think the coronavirus sort of recovery, if you like, which is leading to fears of, as he says, of weaker economic data, both in the US and Europe again, and potential further lockdowns is playing a role. But I think there's a perfect storm going on here today as well. And I think probably the real specific triggers to today's sell-off have got to do with, first of all, the passing of Judge Ginsburg, because what that's going to do, of course, is make the election even more acrimonious, perhaps, and lead to even greater partisanship, and people are very nervous about that. And there is this story, which I'm not really on top of in any detail, but the story about a lot of potential fraud transactions being uncovered in certain major banks. I think that is playing a big role this morning. In terms of the role of the dollar, I'd flip it around the other way. I think the dollar is partly up because equities are down, and it's the equities moving lower for all the reasons that Peter and I have said that are pushing the dollar higher, which is, of course, typically a risk-off move, which is impacting commodity prices and is, of course, impacting emerging market equities as well. But I don't think it's one factor today. I think it's a whole string of factors. And I think the political situation in the US is a very, very important part of this.
Yes. In fact, Peter, let me come to you on the political situation, because filling in that spot on the Supreme Court bench is just the latest flashpoint, and we're likely to see a lot more of that till we come up to the November 3rd elections. How much of a factor is that for US markets, and how closely is it being tracked?
As we get closer to the elections, we're going to reflect to what's happening in the polls, and of course the political maneuvers, perhaps by both parties, by both candidates, I should say. And so up until now, the market has been pricing in a change in political governorship, but again, usually, when you have let's say a quick reversal in the polls, then that will impact the markets. And the polls have been pretty steady. You have Joe Biden, who's been leading in the polls now for months. And so we really haven't had any major upsets in the market, which suggests that the market is bracing itself for perhaps a change of guard in the White House. But with this sudden debt, I shouldn't say sudden debt, but with the debt of Ginsburg, obviously, that sort of throws in a monkey wrench here, and of course. The president does have the ability to nominate someone rather quickly, and has the ability to try and get his new nominee approved before the elections, and that causes more political uncertainties.
Yes. Peter, how do you see this spilling onto emerging markets and India? What is your take on India right now in the context of what we're seeing around the world, fears of a second wave, etc.? While India is sort of, learning how to live with the lockdown, markets have been fairly good, except of course a bad bout today. Do you think that was also in part of a global market response, and that overhang will be seen for tomorrow's trade as well?
That's a good question, and I must say an easy question, because as the U.S. markets go, so does the rest of the global markets go, unless there is a real safe haven somewhere. But this coronavirus is not it's not subjugating just one continent or one country. It's global, and so. Those fares will be tackled down, and if we continue to move lower, I would say that it's a good bet that you can see the emerging markets falling apart as well, and of course the other markets around the globe. And look, we saw that this morning when we came in. The markets in Europe, global markets, were all lowered due to the decline here in the States. So it's followed the leader at this point.
All right, let me get that perspective from Jeff as well. Jeff, do you see this overhang now continuing on to Indian markets tomorrow?
I think that's probably right. I mean, moment, my view is you should be underweight India within emerging markets, and that's really because of the impact of the coronavirus itself on the Indian economy, which of course is devastating and has led to some really poor economic numbers. And I think if you compare that with how relatively successful China, Korea, Taiwan, but all very big markets in EM, likely to continue. Now, I think that what's really helping to push emerging markets down, and I think as much as they did in March, I think this might go on for a day or two more. You're down about 10% from the high on the S&P, just over that on the Nasdaq. I think we may go down a little more before we stabilize, but I'd be surprised if we saw as big a sell-off as we had in March.
Right. All right. I don't have a very clear line there, Jeff, but I'm getting the broad point of what you were saying. So I want to thank you and Peter for joining us on this quick take of what we're seeing on global markets, and we'll have to wait and see if we see that impact once again on Dalal Street, which has received quite a battering today, almost 800 points down on the Sensex. The Bank Nifty down, third trading session in a row, down about 3% today as well. Mid caps have also taken a beating.